Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you haven't. Just remember the disclaimer. Nothing should be construed as financial investment advice. These are just my thoughts, opinions on the market. And let's get into the end of the week stuff. I'll try to keep this not too long, but U.S. economic data today, and I'm not too surprised. Retail sales came in 5%, above the forecast, but the previous one, if you actually look at it, let's see, was the revision. They upwardly revised to 8% and also above expectations of 4%. So, if you actually look at it, not surprised. The BLS head got fired. They got a new one. So, yeah, it's make the economy look good, put lipstick on a pig, or else. So, that's what's happening. If you actually look at it, though, motor vehicle parts, furniture, those are the main things. And a lot of these motor vehicle parts, I think it's from the bill. I mean, let's just pretend these numbers are real. After firing and dipping their nose, I don't think you can really but you can now write off. I mean, not a tax advisor, just some stuff I read, not a tax accountant, so that's just a disclaimer. But you can write off interest on your car loan, where standardized or itemized. So I'm gonna stop pretending like these numbers have meaning. Now they do have meaning for the markets. But yeah, those were strong data. Empire Manufacturing, that's up 11.9. But one thing they can't fake, because this is the University of Michigan and not federal BLS, is consumer sentiment. And that was very poor. 58.6, way worse than expected. And if you look at it here, I was looking at this. What are they mainly concerned about? They say they're concerned about tariffs and inflation, but I think that's just what they're saying because it's popular. Here's the thing right here. They are also worried about their ability to find and maintain employment amidst a cooling labor market. These concerns can easily influence saving and spending behaviors. And look at this, nearly a third of the respondents expect interest rates to fall in the year ahead. So now I don't know exactly, because the truth is, even if they cut rates, the long term, in my opinion, it's going to still go up. So I don't see real interest rates for the consumer coming down. Now, Wall Street borrowing from the Fed so they can speculate. Those interest rates are going to come down next year in my opinion, soon. But the long end, I think, is going to go up, and I think it will be short lived, because now inflation's hitting the real economy, real prices, really bad that even the normies can see it. So I remember when I was talking about inflation and stagflation and shrinkflation, I was talking all about this stuff in like 2011, 2012. But the thing is, asset prices greatly outperformed so much that most people didn't notice it. But now, since your grocery store prices are outperforming the stock market despite the big run, people are starting to notice. And that's why sentiment's bad despite the market doing very poorly. So that is that. And the other thing I want to get to, Big news say United Health, Warren Buffett was buying it. This is what kept sort of the market afloat. Uh, Berkshire Hathaway invest boosts United Health stock by 14%. So it surged. Of course, does Buffett really talk about it before? No, he buys it, gets a share, and then announces it to get the Buffett bump because his name can do those things. But that's why the Dow Jones, if you look at it, was up 34 today. Dow and the S&P, they're still sort of up in the bull market next couple of months, but the Nasdaq, S&P is too big to have the Buffett bump, and the Nasdaq, there is no United Health. So if you look at that, the VIX was up 1.75. This is one thing that generally tech IPOs are roaring. That's years after prohibition. Generally, that's not a good thing, but since it said years of prohibition, tech's been performing really well the last couple of years, so I don't know what to think of these things. I don't know if the IPOs really matter all that much. They generally say massive amounts of IPOs is a sign of a top, but it seems like we've been having massive IPOs. So when you hear this, I wouldn't think too much of it. So in terms of the actual economy, I found this very interesting. So it says Las Vegas tourism, an empty strip and fewer tips in Las Vegas. Yeah, no tax on tips. Well, if no one can give you tips, what good is that tax break? So you can see Las Vegas is doing very uh poorly. And look at this. This is someone who is a hostess at a steakhouse for 15 years, who was through the pandemic. And if they were there 15 years, this is probably right after the great financial crisis. She says she's never seen business this bad. So there it is. Look at this. Wedding chapels, casinos, live entertainment experience slump in visitors. Look at this. 11.3% decline compared to the same month last year. So year over year. But somehow, retail sales went up. Who even thinks that number is real? What a joke. International visitors down 13% same month. Hotel occupancy down 15%. This is the economy. Like Vegas, this is the actual economy. Deserted casino floors. Wonder if they're gonna start having I don't think it's other vacation destinations like Nashville. In fact, a lot of people, when I went to Vegas, they said a lot of people came from California, the West Coast, because it's right there. But economic uncertainty, that's why. If you don't have the money, you're going to be worried about, you're not going to take a vacation. You're going to want to save that money for a rainy day. And yeah, I think the crackdown on Canada is also doing it. You tell the world they're not welcome, they're not going to come. So I do think that plays a little bit, but look at this. Barely has reservations at a steakhouse. Wow. That is big. So that look at this. Recognized weekly tip incomes can starkly vary from week to week, but recent trends point towards a downward decline. So A lot of tables are empty, so you tell Vegas, no, and this shows how bad the economy is. Who doesn't want to go to Vegas? I remember when I used to go to Vegas, loved Vegas. And this was 10, 12 years ago. Ever since then, when I graduated, I went through a lot of bouts of unemployment, had to go back to school. So my life, I mean, the economy was just so bad. I had to become really specialized and good what I did. But anyway, I remember going to Vegas, and it was just incredible experience. I would like sort of gamble, but before I became religious, pretend I was gambling. And then I just used it to get the free booze they always gave out. They always gave out free booze and whatnot. I take them, and it was pretty awesome. And I would uh, there for bachelor parties, there for 21st birthdays. It was like who wouldn't want to go? The food was great. The drinks were great. Incredible entertainment. The pools. So if you look at this, tourism downturn spans nationwide. So if Vegas is declining, it's because people can't have a good time anymore. They don't have the money to. So projected to lose 12.5 billion in international visitor spending. That's 22% decline. So there it is. And then the last thing is, this is one reason I think is, a lot of foreigners are not coming anymore, and this is gonna come. So, let me see if this article actually has, where it is, because I believe Canada's one, and I think, we already talked about passenger traffic and everything else, but it is like some similar, yeah. Domestic tourism slowed, rising costs. Yeah, people can't afford to go out. So that is so that's all. As you can see, the economy is doing poorly. The market wants to make another run if you want to see like the stock market, but just the reality is hitting in. You saw with the consumer sentiment numbers, they can't fake that. And what I'm worried about the jobs numbers, they're just going to outright lie and make everything look good. I remember the market used to follow the data incredibly accurately, just based on what I seen. But gold, I mean, it's always been dishonest, but it's becoming even more the economic data. But gold, I think, still, I showed you that triangle from yesterday. I think it's in bullish consolidation mode. The miners did well despite, let's see where gold, look at gold one more time before I catch off. I had a long day, so, but one day I'm going to try. So, yeah, gold was down, I think, 30 cents for the day, but and silver was flat. But one of the things, the Huey, so you can see right here, uh, I might even just do it on GDX, but you can tell the miners have done well, which is sort of a bullish thing if you ask me. Uh, let's see, I know the Huey, so you can see the miners up 1% today. So anyway, that's